Imagine you are ready to buy your first car or house, and the bank declines your application because you have a low credit score or no credit score at all. Or perhaps you have a lot of accounts or even one account that you are struggling to make payments of. And this one time, you really need the money. And the bank, once again, they decline your application because you have a poor credit score. These are the most common times where we discover what our credit score is and how it actually affects our lives. Hi, my name is Siphelele. Welcome to the channel. Please do make yourself at home by subscribing to the channel. We do though have one house rule. I'm not a financial advisor, and any information that we are sharing today does not constitute to be financial advice. I'm only sharing my personal financial experiences and those of the people around me as we move along in life. When I started working, I needed to buy clothes for my new job. And I remember I went and opened a clothing account, which was with Edgar's. And I remember they wanted a reference, like call a parent to say they allow me to open a clothing account. I was still a student in university, but I was able to do a small work on the side. So because I was scared of my parents, I told my friend to be my reference and I gave them my friend's number to call. Of course, I went on a shopping spree and shopped that limit of 3,000 to the max, thinking that my 1,500 stipend will be able to cover the payment of the maxed out limit. You can already tell that I was off on the wrong foot with my credit score. Sometimes I would pay, sometimes I would not. Then one day I realized that let me just pay off this account and get it over and done with. 2 years later, I got a more permanent job with another company, and it was further away from home. That meant I had to move out of home, furnish my own place, and that meant buying appliances on credit. At least this time around, I had a glimpse of wisdom, and I was paying my accounts on time no matter what. So we can already tell that from the onset, I had played yo-yo with my credit score and my credit behavior. Then I asked myself, what could I have done differently? Which led us to the video for today. A lot of us make these common mistakes without understanding how our credit behavior and credit score can affect us in the future. So what could I have done differently? Firstly, learn what a credit score is. So this is a Siphelele, be it in the past or in the future, learning what a credit score is. A credit score is a rating between 0 to 999, which is done by a credit reporting agency. Who is this credit reporting agency? This could be TransUnion, Experian, XDS, or ITC. So how is this credit score calculated? They look into your credit history, which is accounts that you currently have and accounts that you've had in the past. They also look at your credit payment, which is how are you paying the active accounts. They also look at your outstanding credits. That is, how much are you remaining within the accounts that you currently have now. They also look at the mix of the credit you have. That is, what type of accounts do you have? Do you have different types of accounts or just one type of accounts? They also look at your credit utilization, which is how are you using your credit card or revolving loans. They also look at your credit activity. Are you making a lot of credit applications within a short space of time, or is there a bit of a history? That means you did one application now, one a year later, or you did one application this week, one application 2 weeks later, one application a month later, because it shows as if you have a high appetite for credit. So in percentage, they calculate it this way. They look at 15% of your credit history, 35% of your credit payment, 30% of your credit utilization, 10% of your credit activity, and 10% of your credit mix. So it is very important that when you look into your credit score, you make sure that you cover all these areas equally. This information they collected from credit providers for both individuals and businesses. Yep, a business also has a credit score. Remember, for as long as a credit provider has to lend you money or give you something on credit, they need to know if you'll be able to pay back. So a business will have a credit score for those reasons. It is the same credit providers, which is banks, retail stores, cell phone providers, even rental agencies, that look into your credit bureau when they are looking into your profile as a potential client. These credit providers also look into your employer, your income, your outstanding debts, and your living expenses as they are calculating and looking into how are they going to grant you the credit. So in essence, it's not only your credit score that is taken into account when they are looking into granting credit. So the rating scale that we mentioned above, 700 and above is regarded as excellent. 650 to 699 is regarded as good. 600 to 649 is regarded as fair. 550 to 599 is regarded as poor. And 0 to 550 is regarded as very poor. So this is where we don't want to be at. So let's get to the good and the bad and how it actually affects our lives. So remember we said 650 plus is good and 700 plus is excellent. This is where you want to keep your score. And how could you be able to do this? So let's say, for example, you had one clothing account for quite some time, you're making your payments on time, you are using less than, let's say, half of the limit that they have given you. This could lead you to be able to get a credit card with a very good interest rate. And the credit card that you have can roll out for you to be able to get a very good rate when you want a car and a house. So when you keep your score in the numbers that we have mentioned, which is about 650, around 700 to be in a safe space, like in a very good space, it puts you in a position where you will be able to get favorable interest rates when you want to purchase a house and you want to purchase a car. Because those are the two biggest purchases that you'll be able to do, and they affect the biggest interest that you want to get. So on the opposite side of the scale, which is the bad side of the credit score, this is where the score is between 0 to 550 or 550 below. So in this regard, this is the time where you perhaps have that one account, or you have a lot of store accounts and you're struggling to make payments on these accounts, or perhaps you pay this month, you don't pay that month, you pay less than the agreed amount. That affects your credit score. And if you do this cycle more often over time, it puts you in a very bad space. Or even worse, if you do not have any credit score at all, that means you don't have any account at all. Yes, I understand. You don't like debt. You don't want to take things on credit. But at that one time where you want to rent that apartment and they want a credit history to see if you'll be able to make your rental income, this is the effect that it has in your life. So keeping that one account active and utilizing it correctly to be on the good side, that's what it does when we don't take care of our credit score, or if we don't want to have any at all. That's the ripple effect it has. So how about you are on the average? Say your score is 600, 610 above, in that range. So here you are right in the middle. You're not too bad, you're not too good either. You have those accounts, you are making your payments. Sometimes you miss a payment, sometimes you pay a little bit under, but you try to keep a good score. In this area, you are a bit safe because you can get the credit that you want, but the interest that you would be getting in the credit that you want would be on the average. It's not too bad, but it's not the best interest. So we want to change this aspect as well and maybe move you a little bit to the excellent side. So instead of skipping the payment now and again, not often, try to make those regular payments into those accounts so that it builds the history of how you are paying the accounts, and then in effect will be able to move your score to the excellent side. You're probably asking yourself, how am I going to be able to keep up with all the information that you have told me? Remember, I mentioned the rating agencies, XDS, ITC, Experian, TransUnion, they do allow you to pull one free report per annum. I personally use ClearScore. It's free. They send me a report every month. So this will give you a picture of where you are standing in your credit scale. And then you'll be able to make amends accordingly. If you're in the good, you want to move to excellent. If you are in the bad, you want to make arrangements with your credit providers to make the payments so that you move from the bad to the good. If you are in average, you want to move yourself from average, not to fall into the bad, but to approach the excellent side. Remember, at the end of the day, we are trying to do this to change the effect that it has in our lives. That one time where we need credit, we need to be able to get it in a favorable interest rate. So instead of just playing yo-yo like I did in my early years, let's change the picture and take care of that credit score. Though I always say that a credit score, it's a very delicate thing. You need to treat it carefully. You need to take care of it. You can't just think things will happen because there's no in between. You need to actively work on your credit score by taking care of it. In closing, if a younger me had access to this video, I would have definitely had a different credit behavior because I would understand what a credit score is and the effect that it has in my credit life. So I want you to take this information, make the changes in your life, also sharing it with someone else that you know, that a younger you, a younger me, that is about to make the same mistakes as well. Please don't forget to subscribe, like, share with a friend, a colleague, family, especially a younger person in varsity or in high school who's about to enter a work world before they make the mistakes of blowing up a store card thinking that it will be able to pay themselves. If you did enjoy this video, I think you should watch the credit card video that I will link up, which explains what a credit card is and how it works. Thank you so much for watching today's video. Hope to catch you on the next one.